Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. I am Joseph Cusick from the Cusick Group, securities offered by MoneyBlock, here to wrap up everything that's gone on this week. So we will start, first of all, with the close. The Dow closed at 19,843, basically up like 0.05%, flat for the day. Nasdaq closed down about 0.3% at 54.37, and we had the S&Ps actually closed down at 22.58, down about almost 0.2%. Now, action did come on higher than average volume on both the New York and the Nasdaq, as well as there was mixed action on the advancers, decliners on both the Nasdaq and the New York, with Nasdaq actually having decliners leading and the New York Stock Exchange having advancers leading. The new highs continued to outpace both on the New York Stock Exchange and the Nasdaq. You know, this has been one heck of a week. The past trading week has had a lot of sideways action since the Fed has come out. The S&Ps shed about 0.1%, while the Dow Jones was up about 0.4%, and that outperformed. We did see some relative weakness in the small caps, in the Russell 2000, falling about 1.7% after being the leader and in the forefront for the past 3-4 weeks post the election and into this final trading month of 2016. We started the session this week with the non-OPEC producers meeting over the weekend in Vienna. Basically, they say that they're committed to reducing output by almost 600,000 barrels a day. There also has been some Saudi officials that are basically implying there could be some larger cuts. Crude has surged basically after the 2016 loss. So far, again, coming off the lows and finished the day modestly higher. But again, we're going to watch these crude contracts come very closely, because who knows if they're actually going to adhere to the cuts. The equity indices, they started to get a little more volatile around the Tuesday, Wednesday area when the Fed was meeting. The Fed raised by 1/4 point. That was expected. What wasn't expected is the more hawkish stance that they're forecasting as far as moving rates into 2017. They're now forecasting 3 rate hikes going into 2017. It was expected maybe 1 or 2 going into the next year. So they're becoming more hawkish. That's a signal that they either believe that inflation is on the forefront or bigger growth or both. But it was a more aggressive statement. That pushed the bonds early. You saw that the yield started to pop up. As a matter of fact, taking a look at the 10-year note, finished the week with the yield at 2.6%, or the yield, yes, 2.6%. That was up from last Friday's 2.47%. So up about, basically 13 basis points. Interesting move. Treasuries firmed up towards the end of the week. There is some uncertainty. There's a little profit taking. There's also some headlines coming out of Asia, where the Chinese and U.S. naval vessels were going at it after the Chinese had taken over one of the submarine drones. We'll watch that as that transpires over the weekend. We also saw dollar strength. That also pushed treasuries. Dollar jumped about 1.3%, up at its highest levels that we've seen in roughly about 12 years. With this increased trading volume, with the FOMC meeting, the quad witching that was today on expiration, I expect this, and you should expect that the volume's going to drop off now that we're getting into the holiday season and the end of the year. But again, be on your toes for volatility, and when volume gets light, those movements can get a little bit more whippy, so we're going to keep an eye on that. With that being said, I want to wish everybody a great weekend. Check out over the weekend all of our broadcasts here on MarketStream.live. It's some great education, some great ideas, and some great insights. Also on Sunday night at 5 p.m. Central Time, 6 p.m. Eastern Time, I will be online for the Sunday night setup, so join me there. That'll be a great opportunity for you to kick off your week. Till then, we'll talk to you and have a great weekend. Take care, and we'll see you live on MarketStream.live.